Today on the Blockchain Report, Bitcoin's parked at 108K, but the headlines, full send. Jack Dorsey just launched BitChat, a messaging app for when the internet dies and you still need to text your dealer. Elon Musk started a pro-Bitcoin political party and Trump called him a train wreck, which is rich coming from the guy who hired him in the first place. And Max Keiser says when Bitcoin hits 400K, the US might start seizing crypto companies like it's wartime oil. It's wild, it's on chain, and it's happening all right now on today's show. Let's go! Good morning, my Bitcoin purists, Dogecoin revivalists, and everyone whose wallet still says pending like it's waiting on a Taylor Swift ticket. I'm Hank Hudson, broadcasting live from the capital of crypto optimism and overpriced everything, San Francisco, California. It's Monday, but not just any Monday. It's the Monday after the 4th of July weekend when America collectively wakes up hungover on patriotism, propane, and poorly explained fireworks injuries, while the rest of the country is still Googling how to remove melted popsicles from car seats and wondering if their neighbor's drone was actually a UFO. Well, we're here, caffeinated, decentralized, and one freedom unit richer, because in the land of the free and home of the leveraged, our founding fathers fought for the right to life, liberty, and regulatory ambiguity. So before we dive into the post-holiday chaos with the grace of a Dow and a liquidity crisis, do your civic duty, smash that like button, subscribe to RoxomTV, and follow me at Hank at RoxomTV on every platform not currently flagged as misinformation by the Dutch. Now, whether you're watching from a camping tent where someone tried to explain Ethereum during a lightning storm, your uncle's backyard where they launched fireworks and a new meme coin, or a silent meditation retreat that was rudely interrupted by a Solana push notification, crack open that leftover beer, hydrate with intention, and plug in your cold wallet, because this morning we're declaring financial independence from the middlemen, money printers, and people who say blockchain in every pitch but can't explain proof of work. We've got news, we've got nonsense, and we've got enough hopium to power a new NFT launch. But before we roast institutions like your cousin roasted that marshmallow straight into the fire pit, let's kick off things this morning with our market rundown. Let's go. Yep. All right, we're back from 4th of July weekend, and the markets have reacted. Not impressed. Not a lot happening this morning. Currently, Bitcoin still stuck, hovering over 108K. Ethereum over 2,500. XRP sitting around 231. And Cardano and Dogecoin doing a lot of nothing at 58 and 17 cents each, respectively. In TradFi, the markets were closed on Friday for the holiday. Today, not too much happening. Dow Jones is down 0.5%. Nasdaq's down about a little over 0.5%. S&P is also down about 0.5% this morning. MicroStrategy down about $2. Really, the only big mover this morning is Tesla. They are down nearly 7.5%. We have this news about Elon maybe starting his own political party, and what we've seen is that Tesla shareholders don't like Elon and the government mixing, and their stock price is reflecting that. We got a lot happening on today's show. Special guests, big news, and so much more. So stay tuned when we're back. We have our first guest of the day, Alexandro Lazay of the Blockchain Group. You won't want to miss it. Stay tuned. We'll be back with him and our top stories right after this.
Security matters. Zappo Bank, the only way to bank your Bitcoin. Apply now at zappobank.com.
All right, welcome back. It's time for this morning's bull run, and whew, we have got a big day packed for all y'all. Let's get started. First, former Twitter king Jack Dorsey's back in the news as he's launched a new messaging app. It's called BitChat because Apparently, Telegram was taken, but off the grid, so it's not Telegram. Nonetheless, the Block CEO and Twitter co-founder announced the beta version of BitChat along with a white paper that sounds like it was written by someone who went off-grid on purpose and liked it. BitChat is a decentralized peer-to-peer messaging service that runs entirely over Bluetooth mesh networks, which means no internet, no phone numbers, and no central servers. That's right. It's like texting in the woods during a protest, but encrypted and without Zuckerberg watching. Dorsey said he spent the weekend learning about Bluetooth mesh relays, store and forward models, and encryption protocols, casual weekend stuff. He compared BitChat to old school internet relay chats, which is the perfect way to say this is for nerds without actually saying it. Now, the white paper lays it all out. It says no accounts, no email, no phone number, no central database, and no Wi-Fi required. Messages are ephemeral, meaning that they only exist in device memory. They're not stored. They're not backed up, and once they're gone, baby. The system uses Bluetooth with each device acting as both a sender and a relay node, allowing messages to hop across a mesh of nearby phones. So that's right, it builds its own network out of thin air. And while the Bluetooth range is around 30 meters, bridge nodes can link separate clusters. So if you're at a music festival, a conference, a protest, or a natural disaster, BitChat might be the only way to send a message that isn't read by 5 analytics firms and a government agency. Now, group chats are called rooms. They're hashtag named and can be password protected. And messages over 500 bytes, well, they're automatically split into chunks because even in crypto chat apps, attention spans are short. Future versions will support Wi-Fi relays, which could boost message size and range, but for now, it's full Bluetooth band of brothers mode. Use cases? Well, there's plenty of them, including disasters, blackouts, censorship zones, or just any time your phone shows no service and your paranoia shows full bars. And yes, Dorsey has experience here. He was, again, the CEO of Twitter and then backed Blue Sky, then quietly left Blue Sky's board in 2024 because reasons. Now he's all in and off-the-grid messaging with BitChat because the future of secure communication might not be a blockchain. It might be your phone and your buddy's phone yelling encrypted packets at each other from 30 feet away. And if the government ever cuts off the internet, well, BitChat might be the new default setting for free speech. Check it out, BitChat. And in other news, in a political plot twist absolutely no one asked for, Elon Musk has officially declared he's forming a new political party, the America Party. And yes, it's pro-Bitcoin. Because, of course it is. This new third-party experiment started as a threat. Musk said if Congress passed Trump's massive spending bill, he'd launch a party. Congress did, and Musk kept the receipt, growing the rivalry between Tesla CEO and the president. Now, Elon's America Party aims to challenge the two-party system, laser-focused on a few Senate and House seats, and become the swing vote on contentious bills. In Musk's words, 2 or 3 Senate seats, 8 to 10 House districts is all it takes to force Congress to serve the true will of the people. Whatever that actually means. Now, the launch happened via an X post because launching a political party by press release is so 2020. And within hours, multiple groups filed paperwork with the FEC using names like America Party, Doge Party, and even X Party, some listing Musk as affiliated. X Party, that sounds fun. Now, at least one of the filings was fake. Some others, well, still unclear. So yeah, the paperwork is already meme-worthy itself. But what's very real? Well, Donald Trump's reaction, of course. The former president absolutely lost it on Truth Social. He posted this very long paragraph that I will not be reading completely, but I will give you the first sentence, shall we? I am saddened to watch Elon Musk go completely off the rails, essentially becoming a train wreck over the past 5 weeks. Train wreck in all caps, of course. Trump added that third parties have never succeeded in the United States, which is historically accurate and also a not-so-subtle dig at Musk's very public ambition. Now, Musk's America Party is now officially a problem for the GOP. He's targeting Republican-held seats heading into next year's midterms and threatening to unseat lawmakers who backed Trump's One Big Beautiful Bill. That's the bill Musk has called a disgusting abomination, estimated to add $3.3 trillion to the national debt over the next decade. Now, before it passed, Musk warned GOP lawmakers, "You will lose your primary next year if it's the last thing I do on this earth." And if that sounds dramatic, remember, this all started while Musk was serving in the Trump administration as the head of the Department of Government Efficiency, or DOGE, named after the meme coin he now claims is being undermined by Trump's budget. So yeah, the guy who once ran a federal agency named after Dogecoin is now starting a third party, and Trump's base is panicking. Republican loyalists are worried that the American Party will fracture the GOP vote, handing key seats to Democrats and blowing up their thin majority in Congress. Far-right influencer Laura Loomer even suggested that Representatives Marjorie Taylor Greene and Thomas Massie could defect to Musk's party, which would make for some absolutely unhinged X Spaces. Personally, I can't wait. But what does this have to do with Bitcoin? Well, Musk's party is explicitly pro-Bitcoin and anti-fiat, anti-spending, and anti-SEC overreach. Both Tesla and SpaceX already hold Bitcoin on their balance sheets, and if Musk starts putting campaign cash into a Bitcoin treasury structure, we could be looking at the world's first laser-eyed political party. Musk says this isn't about becoming president yet, but if you believe that, you might also believe Dogecoin is a stable coin. And while the U.S. two-party system has chewed up every third-party challenger since 1856, Musk isn't most challengers. He's a meme-powered billionaire with 170 million followers and an actual space program. So whether this ends in electoral reform or an epic flameout, Bitcoin might be the only winner either way. All right, so we're moving on. We've got something pretty exciting for you guys and gals today. Joining us on this morning's Blockchain Report episode is a very, very special guest. He is a guest who is helping rewrite the rules of corporate finance in Europe, and he's doing it with Bitcoin. From advising top financial institutions at Accenture to now running Europe's first publicly traded Bitcoin treasury company, he's not just talking about BTC strategy, he is the strategy. With over 1,900 Bitcoin under management and a 1,300% yield and a mission to stack 1% of all Bitcoin. Please give a big Blockchain Report welcome to the show. Returning from his world tour that just rocked Seoul, we're looking at the Deputy CEO and Director of Bitcoin Strategy at the Blockchain Group, Alexandra Lazay. Alexandra, how are you? Thank you for joining us on the show. We are excited to have you here, my friend.
Hello, hello. Thank you for having me. Very happy to be here with you today.
Oh, the pleasure is all ours. Now, Alexandra, before we get into the stories, I would love for our audience to know a little bit more about you and everything you're doing at the Blockchain Group. Can you summarize that for us a little bit, please?
Yeah, the Blockchain Group started its Bitcoin strategy back in November 2024. And since then, in over 8 months, we've been Europe's top performing stock with more than 2,000, 3,000% performance. And we have accumulated from 15 Bitcoin to 40 to 600, 800, 1,200 plus, and now 1,900 BTC. And through our capital markets activity, we have generated more than 1,300% BTC yield, which is the increase of Bitcoin per share. So as you mentioned, the context of today is that institutions over the world are adopting Bitcoin. There is an explosion of BTC treasuries, and there is a context of Bitcoin adoption and Bitcoin fixed supply compared with government spending that is a very bullish scenario overall for the next 5, 10, 20, 100 years. So what Bitcoin treasury companies are doing is an arbitrage between fiat and Bitcoin and accumulating as much Bitcoin as possible, as fast as possible, in the most accretive way as possible. So that's our full strategy, is to adopt the simplest strategy, but to execute it at scale in the fastest way possible with a team of Bitcoin maximalists and financial engineers.
Incredible. Well, we are super excited to have you on the show today and get a deeper dive into everything you guys are doing at the blockchain group in just a bit. But right now, we've got two stories that I just cannot wait to get your thoughts on. You ready to roll?
Definitely.
Okay, hang 10. We'll be right back with you in a second. This next story in particular, I got a feeling you're going to want to chat about. Because if Bitcoin accumulation were a leaderboard, two more players just moved up the ranks like they unlocked cheat codes. First, let's start with Metaplanet. Japan's corporate Bitcoin sponge has added another 2,200 BTC to its balance sheet, dropping 238.7 million bucks like it's an Amazon cart filled with orange coin. That brings their total to 15,555 BTC, firmly planting them as the fifth largest public company holding Bitcoin globally. And let's take a look really quick. You can actually check them out on one of my favorite websites in the whole wide world, a little thing called BitcoinTreasuries.net. So let's take a peek here. This is the #1 place on all the interwebs to check out the holdings of public companies and how much Bitcoin they have in their stash. It's actually super helpful. So if we go right now, we go to Metaplanet. What are they ranked currently? They're up to 5 now. So if you click on them, if we can do that for us, guys. What you'll do is you can actually open up their file and we can see how much Bitcoin they have on their balance sheet. So they always have fun numbers at Metaplanet. So 15,555 with an average cost basis of 98 grand-ish, 98 and a half, and then has their profit loss. You can actually scroll down and see how this affects their stocks and other financials. Really great place to keep track of all the public Bitcoin holders. As we're seeing them, they're popping up every day. So the #1 spot, BitcoinTreasuries.net. Check it out. Best place to figure out who is holding that Bitcoin, baby. Let's get back to camera 1 here. Now, still trailing behind them, you might have noticed, or ahead of them, I should say, is Michael Saylor's strategy, which has nearly 600,000 BTC currently. But, you know, at least Metaplanet's trying to keep pace. Now, their CEO, Simon Garovich, said they paid an average of $108,000 per coin in their most recent buy, which honestly feels like a discount in this economy. And Metaplanet now is trying to hold over $210,000 by 2027. Because why shoot for the moon when you can just buy it? Meanwhile, across the globe, the blockchain group, they're playing the same game, and we're going to talk to Alexandra about it in just a sec. They confirmed the purchase of 116 BTC for around 12.5 million bucks, bringing their total stash to over 1,900 Bitcoin. And an impressive show of strategic execution with an ATM-style capital raise and a well-timed convertible bond issuance in early July, giving the blockchain group the firepower to keep building on its Bitcoin treasury vision. Now, here's where things get a little extra spicy. Their year-to-date Bitcoin yield is over 1,300%. Yeah, you heard that right. 1,300. Now, the funding came from crypto notables like the Paris-based asset management firm Tobam and Adam Back, who helped bankroll the recent BTC buys at an average price of about 105,700-ish per coin. Now, Blockchain Group's total Bitcoin reserve is worth over 201 million, which means they may not be in Metaplanet's weight class just yet, but they're definitely punching up. Together, these two firms are doing what governments won't. Banks can't, and ETFs sort of try to, and that's aggressively hoarding Bitcoin like it's the last scarce asset on Earth. And if this keeps up, we might need a new index soon. Let's call it the Satoshi 500 for companies with diamond hands and laser-focused treasury departments. Now, one thing's clear, Bitcoin isn't being adopted, it's being acquired strategically, relentlessly, and with zero regard for fiat fragility. The blockchain group's 1,300% year-to-date Bitcoin yield is insane. And what's driving that performance? And how do you see? Oh, sorry, I just jumped right into things here. So let's bring Alexandra back here. I want to ask him some questions about this. This is a really interesting one. So, Alexandra, your guys' year-to-date Bitcoin yield is out of this world, over 1,300%. What's driving that performance, and how do you see this strategy evolving long term? Because we're only in the infancy, I feel like, of this right now.
Look, the whole value proposition of a Bitcoin treasury company is to provide a form of levered Bitcoin exposure to investors without the company needing to take leverage. So we have inspired ourselves from the best out of Strategy and out of Metaplanet, which are extremely successful companies, and we wanted to replicate that out of Europe. So what we have developed is BTC-denominated convertible notes that allow us to raise infinite amounts of Bitcoin without credit risk, subscribed directly in Bitcoin without even touching fiat, directly transforming raw Bitcoin into Bitcoin securities for investors that want to get a form of levered exposure to Bitcoin. And so that's how we generated more than 3,000% performance since the launch of our strategy to investors, while Bitcoin is up 30, 50%. And the other aspect of it is the investors that you put around the table. So as you mentioned, we have Adam Back, the only person mentioned in the Bitcoin white paper, without whom we wouldn't even have Bitcoin as it is today. We have Fulgor Ventures, the largest Bitcoin venture capital fund in the world. And we have Tobam since the very beginnings with its president, Yves Chefati, a 2 billion asset manager in France who's been leading the way in Bitcoin since 2017. And as well, Ludovic Chechin-Laurent, part of the board, who is also the co-founder of Capital Union Bank, the largest independent bank in the Bahamas with more than 40 billion of assets. And so when you couple these figures and these investors and the knowledge around the table, plus the chairman of our board, who is an ex-president of an asset manager, and myself, Bitcoin maximalist, who's been working with 30 plus financial institutions and half of the largest corporate treasuries in France. Well, what you get is the financial engineering of nuclear reactors for Bitcoin accumulation through one, our BTC nuclear reactor SPV in Luxembourg for BTC denominated convertible debt, and two, an ATM type structure with Tobam, the asset manager, that allows us to do the exact same structure as Metaplanet in Japan at French and European scale. Of course, we are starting this program and we need yet to see the full scale of it over the next months. That's a 300 million envelope for ATM type structure. The BTC denominated convertible debt has absolutely no limit. We have a 10 billion euro capital raising capacity, and I'm dedicating 121% of my time, laser eyes focused, on maximizing BTC yield, the increase of Bitcoin per share over time, by having new type of securities that we could issue over time. We have not even yet started public offerings that we have been authorized to do, and we still need an approved prospectus from local regulators when this is the time. And we have also not yet leveraged securities that could be similar to the ones of strategy, for example, preferred. It could be different, but we are dedicating our time to issuing the securities that can maximize BTC yield over time, while at the same time having a lot of investor conversations to allocate either to our private placement in equity, to our private placement in BTC denominated convertible notes, or to potential new securities that we could issue in the future, as well as geographical expansion. All of this progress has been done without even having an OTC ticker yet in the US, for example. So we are working on all of this to maximize BTC yield for our shareholders. And as a lot of Bitcoin treasury companies are emerging, it is important to remind as well the long-term focus. We are not here for a short-term, quick pump and dump. The objective is to build the foundation of a European empire and a global empire for Bitcoin accumulation at scale with sustainable tools, financial instruments that are risk minimized, and maximize the number of Bitcoin accumulation that you can get as soon as possible, because fiat is going to zero and you need as much Bitcoin as you can as fast as possible.
Well, I certainly appreciate your ambitions, Alexandre. And when you're having, your yield year-to-date percentage, and you guys got like Adam backing you, it sounds like you are certainly on the right track. And you've raised funds through an ATM-style capital raise and convertible bond issuance, which makes me wonder, why do you think that structure makes sense for Bitcoin acquisition right now?
So the ATM type structure makes a lot of sense for when times where the Bitcoin price is going up or where the share price is going up, and that way you are using the premium and converting it into net asset value in a way that doesn't punish the stock as well. So it's a form of long only ATM type structure together with TOBAM, and they are only incentivized to use it when the share price is in strength. And then on the other side, we have the BTC denominated convertible notes, which can be used at any time and that allow for investors to get the benefits of either Bitcoin back if the company fails. It's a bankruptcy remote SPV out of Luxembourg, or the call option of the company itself, which is basically Bitcoin plus BTC yield. So that should be outperforming Bitcoin over time. And so you have different tools for different investors at different times. And then what you need to remind is a long-term focus because the market, the capital markets, and of course, the Bitcoin market itself is very volatile, and the Bitcoin treasury company is even more volatile. So you cannot be lettuce handing a Bitcoin treasury company. You need conviction. You need conviction in Bitcoin, and you need conviction in the team to maximize the BTC yield over time. And so a right investment horizon for Bitcoin is 4+ years. The right one is forever. And I would say that the investment horizon for a Bitcoin treasury company, if you believe in the capacity of the management to maximize BTC yield, should be at least the one of Bitcoin.
And you guys certainly aren't the only people with a lot of conviction in Bitcoin right now, or made a large purchase recently, as Metaplanet also made a big purchase just in the last 24 hours. And they are also targeting a pretty high Bitcoin target by 2027. They're looking to acquire around 210,000 by the end of 2027. What's your vision for the blockchain group's place in the corporate Bitcoin ecosystem over the next 2 to 3 years? Where do you see things going?
Yeah, we have announced our plans to ambition 1% of the total BTC supply over the next 8 years. In FYE 2025, so this year, we are already at more than 60% of our target for 2025. So we are on track and even at an accelerated pace to reach that target of 1 to 3K BTC for the year. We are already at about 2,000 BTC on the balance sheet, and that's accelerating. And given the market appetite for Bitcoin and for Bitcoin treasury companies, we are working as hard as possible to maximize the number of Bitcoin on the balance sheet and increase those targets as we go. But those targets is to reach about 20K to 42K BTC over the next 3 to 5 years, and to reach about 210K BTC by about 8 years. And if we achieve that, and if Bitcoin in the meantime goes to about 1 to 2 million euros or dollars per Bitcoin, then you could have, with the blockchain group, Europe's largest publicly traded corporation as we speak. And so the opportunity is massive, and we are focused on it. I think that a lot of people overcomplicate it and try to do different models that provide less BTC yield. We are focused on the straight and simple model, and how to differentiate is not to differentiate, but to apply the playbook in the fastest way possible, because at the end, it's the more velocity that will win, and it's the most aggressiveness into the BTC accumulation that will win. And we are focused both on the velocity with the ATM type structure that allows us to do regular purchases of Bitcoin, and on aggressiveness with the BTC denominated convertible note that allows us at any time basically to increase with a major Bitcoin investor the Bitcoin NAV to the existing premium, and at this time convert the whole premium into net asset value. At least that's, of course, the objective, the ambition, and we are working as hard as possible on it.
Oh, I really appreciate you giving us that insight and pulling the curtain back behind your company's Bitcoin Treasury strategy. But as we know, not everybody is a huge fan of that strategy, and I want to talk to you about that in just a second, get your thoughts, because this next story addresses that quite specifically. As Fred Thiel, CEO of Marathon Digital, one of the world's largest Bitcoin mining operations, says the Bitcoin Treasury model is getting bloated, like your uncle's Dogecoin portfolio back in 2021. In an interview with Bloomberg, Thiel said that all of these companies turning into Bitcoin storage lockers are starting to hit diminishing returns. His take, when Bitcoin goes up, these treasury firms should theoretically outperform. After all, they're leveraged to the price. But that's not really happening anymore, because everybody and their VC-backed cousin is trying to be the next Michael Saylor. And at some point, you can only have so many companies with zero product, zero revenue, and one strategy: buy Bitcoin and pray. According to Thiel, we're now seeing saturation. You take a company with a barely profitable business, slap Bitcoin Treasury on it like it's a keto sticker, and hope the market buys it. But when the capital dries up or the price stays flat, those same firms are left fighting over the scraps. The problem here? Everyone wants the multiple to net asset value, but that multiple can only go so high. Eventually, it collapses to zero, which is awkward if you've built your entire business model on vibes in a cold wallet. Recent examples of new BTC treasuries include Pompliano's ProCap BTC, Cardone Capital, and, of course, GameStop. Because when in doubt, bet on a company that sells Funko Pops and meme coin momentum. Now, the takeaway here is that the Bitcoin Treasury strategy only works if you're early, or if you're Michael Saylor. Now, for everyone else, it's getting a little crowded. And if Bitcoin doesn't go vertical, some of these firms are going to learn what happens when HODL meets margin call. That's not bearish for Bitcoin. That's bearish for the free riders. The kings stay kings. The copycats, well, they get wrecked. All right, we're bringing Alexandra back. Alexandra, Fred Thiel says the Bitcoin Treasury model is bloated. Do you agree that we've hit peak Treasury, or is there still room for some smart players with long-term vision out there?
Look, it is not untrue that you see a lot of players emerging, and that is extremely positive. You see an explosion of interest for Bitcoin. You see an explosion of interest for Bitcoin treasury companies, and you see also an explosion of risks for a retail investor that I want to spend some time on. When you invest in Bitcoin, you need to understand Bitcoin. And when you understand Bitcoin, you understand that what matters is the number of Bitcoin you own, not the prices in fiat that matters, because fiat is going to zero. And so when you invest in a Bitcoin treasury company, if you don't understand Bitcoin itself, you will get scared and sell at the bottom and buy at the top. And when you understand the Bitcoin treasury company, you understand that there is no top, because there is no top in Bitcoin. There is no top in a company that effectively accumulates Bitcoin on the balance sheet and effectively works to increase the number of Bitcoin per share over time, to effectively transform the premium into net asset value. But where you take a major risk is when you invest in a company that says that there will be a Bitcoin treasury company, sells at a high price, and then doesn't execute on the strategy. And that way you can have a top effectively, because a company is not, of course, working on the objective it aims for. And so you need to understand, when you buy a Bitcoin treasury company, that you take a double risk. You take a risk in Bitcoin itself, because nothing is certain, because Bitcoin could either go to zero or completely eat the capital markets. And that is a pure function of knowing if Bitcoin is decentralized and secure, bounded by energy. That is a correct statement today. And that is the statement you need to monitor over time. And that is, if you want to learn more, please look at interviews of Jeff Booth. He does an incredible job of describing that. So if Bitcoin stays decentralized and secure and bounded by energy, and effectively is the most decentralized and secure network powered by cryptography, equivalent of 21 nuclear reactors behind it, then you have the most secure and the best bet for outperforming 99.99% of asset manager by simply holding Bitcoin. And then you have the opportunity to have a form of levered Bitcoin exposure if you buy a Bitcoin treasury company that effectively executes on the promise of increasing Bitcoin per share over time. And so out of the hundreds and thousands of Bitcoin treasuries that will emerge, then you will have a hand or two hands, maybe 5, 10 main Bitcoin treasury companies that will distinguish themselves by being fully focused on maximizing Bitcoin per share over time. And you can really already see it by filtering the companies that don't even have a person dedicated to maximizing Bitcoin per share. And that's why you see an explosion now of companies recruiting directors of Bitcoin strategy, because you cannot maximize Bitcoin per share if your full focus every day is not to maximize Bitcoin per share. That is the full focus you need to have. That is my full focus every day, and that's the full focus of our board and more people that we are also recruiting to expand the team, especially geographically. And so that's the first element of response. A second element of response that's a bit more structural is to know whether or not the premiums of Bitcoin treasury companies will go to 1 over time, meaning that they will compress as they grow. And I think that's a clear misunderstanding of capital markets. When you have strategy accumulating billions and billions of dollars of Bitcoin on the balance sheet, and going towards 1 million Bitcoin on the balance sheet, you have a capital markets monster on formation. And when you become a multi-trillion-dollar company because fiat is going to zero and you have the most Bitcoin on earth, then you are becoming one of the top company in the world, and effectively potentially the most valued company in the world with the most options. And what would be the valuation in fiat of this company? Well, now you can start to understand why there is a potential premium that will stay or potentially go up over time, as strategy is completely eating the credit markets in the US and potentially the world, with the whole demand that you have over the world for those type of securities. So what we are doing at the blockchain group is exactly model this strategy at European scale, and as well add some geographical expansion to take advantage of this global demand that can be addressed with various financial instruments and that can have different type of investors profile. Because when strategy wins, we win, because when an investor has had a successful investment in strategy, they might want to replicate that investment in the blockchain group and vice versa. And that's the same, for example, with the huge success of the smarter web in the UK. Congrats to them. When they win, we win, because when they are educating thousands of finance professionals in the UK, those financial professionals, they then will turn out to other companies that can provide a different type of risk return over time. And the same goes for us. When we win, the other players win. And what is true, however, is that everyone on earth is competing for more Bitcoin. And what I want to emphasize is that it's not a zero-sum game. You have hundreds of trillions of capital waiting to be deployed to Bitcoin because Bitcoin is the superior asset. And as those hundreds of trillions of dollars go into Bitcoin treasury companies, what you have is a lot of Bitcoin treasury companies that are becoming the most valued companies on earth with the most options on earth. And today, capital markets, they value cash flows based on multiples of earnings. And those multiples are higher than the premiums you see on Bitcoin treasury companies. And everything that happens in traditional finance is going into Bitcoin treasury companies. And so you will have constant, potentially, or even higher premiums than now. And so the financial models will be completely broken because fiat is going to zero and Bitcoin is going to be the core value proposition of the standard of value for the whole world. And that's a multi-hundred trillion dollars use case, and that's much bigger than just a few Bitcoin treasury companies today.
Interesting. So let me ask you this. You mentioned maximizing their Bitcoin strategy. Is that what differentiates the blockchain group's approach from the wave of companies that are just out there buying Bitcoin and hoping for the next big pump? Is that you guys are actively trying to maximize that strategy, or is there something else the blockchain group is doing that differentiates you from all those other Bitcoin treasuries that are starting to pop up right now?
Look, the first point is we are not trying to differentiate from others. We are maximizing the velocity and the aggressiveness. And so if you would find some differentiation, you could observe some of the past velocity and aggressiveness that we have brought to the space by going, for example, from 40 Bitcoin on the balance sheet to 620 Bitcoin on the balance sheet, increasing by 15x the number of Bitcoin, while we increased at the time by 2x the number of fully diluted shares. And so that is provided by the BTC denominated convertible notes. And this speed and this velocity is highly valued when you want to maximize Bitcoin per share. So effectively, these BTC denominated convertible notes don't exist anywhere else in the world right now. And that's a core value proposition that we have. A second one, and I think a founding one, and the core value proposition is effectively that we have within the team we have decades of experience in finance, in bank. Literally, one of our board members is the co-founder of a bank, and the other board member is an ex-president of an asset manager for decades. And we have as well the founder of a successful technology business for 20 years. And myself, that has been working with the tens of financial institutions over the world on their digital asset strategy, and corporate treasurers on financial engineering for the whole group. And so what you have together with Tobam, together with Fulgur, and I didn't mention, my bad, UTXO Management, of course, one of the most successful funds out there and the founder of many Bitcoin treasury companies through their strategic investments. Through this team, you have a unique team with a unique background in financial engineering and in corporate treasury and in the capital markets area that provides one of the most outsized return potential based on the capacity of the team to raise capital in an accretive way, not at all costs, but in a way that maximizes, of course, the Bitcoin per share. And so that's the core principles that you want to be held, is to raise as much capital as possible, to accumulate as much Bitcoin as possible, but in the most accretive way as possible. And 99% of teams that don't have this type of team members and Bitcoin maximalism at the core, they will not be able to handle bear markets. One of our core value proposition is we have zero credit risk based on our capital raising operations, and that's quite important. And we understand the urgency of accumulating Bitcoin on the balance sheet. We are not trying to optimize Bitcoin purchase, for example. And so I think that we have a laser eyes focused approach on BTC yield that is the fastest growing year to date, and that we, of course, aim to accelerate over time. And I think we need to work on many more things as we grow. We need to provide, for example, analytics for the website that we are working on, and we need to call our shots more in advance, for example. But we, of course, do our best based on the regulatory framework we have in France and Europe overall.
Well, Alexandre, I really appreciate you giving us a peek into the playbook of the blockchain group and what they're doing with your Bitcoin treasury strategy. With all these companies coming out right now and buying Bitcoin and putting it on their balance sheets. It's really interesting and enlightening to hear somebody who's actually in the midst of doing it give us a little bit of insight as to your plan there. So that was really fun. We're going to go to our deep dive really quick. We got a few more minutes with Alexandra, so let's run the stinger because I want to get a little info on you, Alexandra. You've had a super interesting career, and I want to talk about it in our deep dive. Here's the stinger. All right. Now, Alexandra, you've had a really interesting background. You've gone from Ernst & Young to Accenture to now leading Europe's first Bitcoin treasury company. What was the moment that pulled you into Bitcoin full time? What was that like?
Look, I entered Bitcoin back in 2020 with COVID and discovering that I had no freedom left. And that moment, I realized I needed to focus all of my time and energy to Bitcoin. So my first step was to use machine learning and deep learning algorithms to code myself and to analyze the Bitcoin blockchain data. At the time, I still had a discovery mindset with Bitcoin. I thought you could potentially outperform Bitcoin at the very beginning. And very quickly, in a matter of months, with a lot of data science, I understood that no human being could ever outperform Bitcoin. And 5 years later, and together with the Bitcoin Treasury company strategy, I understood that the only way to maximize and to beat Bitcoin is more Bitcoin. And so at the same time, back in 2020, that I was working with corporate treasurers at EY. At the time, I was advising them to optimize their international intra-group transactions, cash pooling, intra-group debt, and so on. At the time, I was seeing corporate treasurers allocate their funds to negative yielding monetary funds, which was a complete waste of shareholder value for those companies. But somehow they were blocked into this traditional finance schema where you have to give up all of your money and expect some yield from somewhere. So effectively, at the same time, you had Michael Saylor launch the first Bitcoin treasury company with strategy and the major success it had, and that marked my career, and I decided to go all in on institutional adoption of Bitcoin. I started to become digital assets lead at Accenture to focus more of my time and energy into Bitcoin institutional adoption. I effectively orange pilled a lot of banks into adding new Bitcoin offerings for custody and for the implementation of retail and institutional trading for Bitcoin for all of their clientele. And after some time, I used to work with Bitcoin companies that I used to introduce to those big banks out of Europe and some in America and Asia. And that's how the blockchain group at some point approached me to launch a Bitcoin treasury company strategy. I was already a Bitcoin maximalist, and I was already convinced that the only way to outperform Bitcoin is to have more Bitcoin. And the only way to have more Bitcoin in a risk minimized way without playing with Bitcoin is a Bitcoin treasury company. So that's how I ended up at the blockchain group as deputy CEO and director of Bitcoin strategy, by mixing my experience with corporate treasurers in cash management and treasury management and treasury optimization, together with my experience in digital capital markets with the major banks that I helped. And that's also how I know that those banks are all preparing their offerings, because for many of them, I contributed to build their strategic playbook and their strategic offering and their strategic planning for the next years. And so that's how I knew firsthand, even before Trump's election, that there would be a massive flow of Bitcoin offerings and Bitcoin demand through institutions. And that's also through these experiences that I brought major investors to the table of the blockchain group, and that so that we could execute extremely fast the playbook of the Bitcoin treasury company strategy.
Yeah, and your journey in Bitcoin seems to follow a pretty common pattern where people think that, oh, I can do better than Bitcoin, or I don't believe it. Then you do your research and you're like, wait a second, this is something unlike anything I've seen before. And then people end up going all in. We saw it with Michael Saylor. I've seen it with countless other guests we've had on the show, and now we've seen it with you. So it seems to be a common thread here. One interesting thing about your background is when you were advising Accenture on digital asset strategy to all of these different institutions, right? What were the biggest hurdles that you saw in TradFi's adoption of Bitcoin, and how did you help those institutions overcome those hurdles?
Look, the biggest hurdle is carrier risk. And at the time before Trump's election, I used to do 200 pages reports, slides and presentations, and thousands of presentations to boards. And at the end of the day, if there is a major carrier risk for a major leader of a bank, he will not move. So at the time of the Trump election and even further, the Bitcoin strategic reserve, and I would say even towards when the US effectively starts to accumulate Bitcoin, not only keep the reserve, but starts to accumulate Bitcoin, you will not see major European bank leaders to completely do an all-in on Bitcoin. But what you will see in the meantime, in any case, is offerings that are starting to be developed for retail exposure through ETPs or for Bitcoin exposure with integration of neobank type offerings, for example. But in a way that will be more that if you look for it as a client, the bank will be able to offer you the service, but not a full-blown active marketing campaign as we are starting to see in the US. So at least in Europe, you will see the start of offerings that are starting like a gradual way of introduction. And over time, when the US moves faster, when some banks in the US start to launch offerings in a faster way, and which is already starting, of course, you will see also European banks go along the way as their carrier risk is completely pivoting. Because if the leaders in the market are doing Bitcoin, the followers in the market will do Bitcoin, and that's to be expected. And that's the same for corporations. At the time, it was strange to do Bitcoin on the balance sheet, and now it starts to be the only way to beat the market to have Bitcoin on the balance sheet. So that will be the first step. And then companies will realize that it's not only about adding Bitcoin, it's about adding all of the Bitcoin of the long-term capital to the balance sheet. And then they will realize that it's not only about it, it's about doing it in a way that maximizing Bitcoin per share. So I think that there will be phases of institutional adoption. And what I've seen as hurdles is carrier risk mainly and political risk. And those risks are going down. And as this risk is going down and even reversing, and the risk is more to not adopt Bitcoin, then you are going to see an explosion of institutional adoption, which will drive, of course, the potential of Bitcoin treasury companies upwards.
Well, I got to say that I really appreciate that explanation, Alexandra. It's such a treat to get somebody here that has such a wealth of knowledge about this huge Bitcoin corporate strategy thing that we're seeing happen before our eyes, and is somebody who's really helped perpetuate it and convince not convince, but show TradFi the light and orange pill so many big corporations, and continue to do so with your efforts at the blockchain group. It's really been a treat to have you on the show today. Before we let you go, if our audience is watching, they're like, hey, Alexandra, I like what he has to say, and I want to learn more about him and the blockchain group. What's the best place for me to send him?
Hey, the best way to reach out to me is by tagging me on X for me to look at your recommendations and what you expect from us. I look very carefully at all the different recommendations from our shareholders. And you can be sure that we take those into account, and we will work every day for you to maximize that BTC yield over time. And you can also reach out to me on LinkedIn, where you can send me messages where my chief of staff is able to look at them and forward the key messages to me as we go. So that way, you know that you can contact me. And as well, you can look at our press releases where we have our investor relations contact. So you can also write an email to that address, and we will have a look at it. Thank you so much.
Amazing. It was a pleasure, and we're going to make sure to have you on next time you make a big Bitcoin buy. You let us know, Alexandra. It was a pleasure having you on the show, and you enjoy the rest of your week, my friend. Thanks for joining us.
Thank you so much. Looking forward to the next one. Cheers.
Cheers. All right, we're taking a quick break, but when we're back, we got another guest you're not going to want to miss. We're talking to Stephen Big Bet Orr on the show, so get ready, take a seat, grab some of your cold brew. We'll be right back with more Blockchain Report and Stephen right after this. All right, back with us today. We've got a real treat for you. Our next guest is someone who doesn't just understand markets, he's been helping shape them for decades. He's a seasoned Wall Street pro, fintech trailblazer, and someone who always brings clarity when the headlines don't. Please welcome back to the show the CEO of Quasar Markets, Stephen Big Bean Orr. Stephen, they're just as excited to see you as they were last time. How are you on this Monday? It's great to see you.
When you said no clarity in the markets, all of a sudden you need to see some clarity. And look, I think RoxomTV brings that to the world. And I think, just seeing that ad talking about how in 1800s, London was changing the world when it comes to finance, and then the United States, obviously, with the dollar. But we know that's falling apart, right? We know that the fiat currencies that everybody talks about, the Dixie and all those things, are not up to par. We just saw something, Hank, that we haven't seen in 5 decades. The U.S. dollar had the worst start of a year in history. Almost, we got to go back 5 decades to even talk about that, as the dollar continues to fall. And look, when that happens, you've seen Bitcoin go from the mid 90,000s to walking around 110,000 almost daily now, 108.5 now. So we are seeing the 4th industrial revolution right here, and I love it. I love what Roxom's doing. It's great.
Oh, well, we certainly appreciate that, Steve. I mean, especially somebody who is quite literally changing how the average person can participate in the markets by giving everybody the most up-to-date info, stuff you wouldn't even think is relevant, but they're showing it how it's relevant to the bigger picture. Before we jump into the stories, I'd love for you to give us another quick breakdown of all the amazing things you guys are doing at Quasar Markets to really make it a more fair playing ground for average Joes like me out there, so we're not getting killed by all the sharks and all their tools. Tell us a little about Quasar. What's going on over there currently?
Yeah, that's a good question. Look, it's very simple. A lot of the tools that everybody plays with today, I've either been a part of, helped write, design, develop. I love it. And I've been a part of the technology side of the NBA, NFL, PGA Tour, you name it. I've done on TV. And of course, finance for over 3 decades, 34 years now. And what I realized in these markets is that the winners are very simple. It's not always about who has the best charts, or it's about who has the most data, right? I need to understand what's being said out there. And in the past, we understood it because of some talking head telling us, hey, this is what's going on in the market because this is what I think. And instead of democratizing data, they kept it themselves and the institutions play with it. What if I could take the institutional data, every bit of it, weather patterns, sports scores, stock quotes, options, put it all together in one place. Also AI it. Also give you FDA databases, give you databases that the government has that they don't normally give out. Take all of that, put it in one place, and democratize that data. And do it in a way that doesn't cost you thousands of dollars a month. We did it for $15 a month. Did it in a way that also you use it any way you want, whether it's in your watch, your Oculus, your Vision Pro, obviously your desktop, your cell phone, of course, without even having an app for it. And for all of that, and boil that down as cheaply as possible, I can to make it as best as possible and as fast as possible. We actually don't even use external data. We use data directly from NASDAQ, directly from the New York Stock Exchange. We don't third party it. We actually get direct data when we also partner with companies like Binance. We do trading. We also going to have our own exchange. We've got so much going on here that I don't even know what to talk about, Hank. I could go on and on and on about it.
Well, we're just appreciative of you guys giving little fish like me a fighting chance in the market out there by giving us up-to-date info that even some of the big guys don't have access to. Like, I'm wondering right now, what does Oasis's comeback, how does that affect the Bitcoin market? And I know you guys are the place to go if I want that info. So we certainly appreciate it.
You know, it's interesting you asked that question about Oasis. You know, look, people don't understand this, that 9 times out of 10, things that we don't understand that affect the market, we don't understand it because we don't understand it, right? Why does someone in Japan who's trading something that we don't even know about, how is it affecting the trains in the United States? Well, we don't always know that, so we have AI. But I'm gonna tell you one thing, paraphrasing out of Oasis, don't look back in anger, right? We're going to look forward a little bit, and we're going to say, look, okay, I understand the past was all about institutions winning the game. But if you noticed over the last 5 years, especially during COVID, sometimes little guy does win, right? When you look at the meme coins and the way that we've changed it, if you talked to me 15 years ago when I first got into crypto, I bought my first Bitcoin at $75. Yes, I was part of the whole Mt. Gox thing, and thankfully, knock on wood, I got out the Mt. Gox before it all fell apart. But when I look at those, we had no idea back then, Hank, that what it would do this fast. The speed of which the adoption of crypto has moved so fast that even some of the normal tech rules of doubling and doubling and doubling aren't even part of the equation anymore. You look at people like my friend Anthony Scaramucci, the Mooch. He talks about it. This is institutional money. You talk about a guy like Michael Saylor. This is institutional money. Okay, they were the first ones to say, okay, you know what? I believe in this. I now understand it. I had to take time to understand it myself. They're buying, right? Now, let's fast forward to 2 years ago where JP Morgan, Ray Dalio, these guys were saying, no freaking way am I buying crypto. Today, they own ETFs. They own Bitcoin. They're some of the biggest owners of crypto, right? And so we have to understand what their thinking process now is because it has changed. I asked Ray Dalio at the World Economic Forum. I said, Ray, how much should a person have in their portfolio? Now, this was unheard of 5 years ago, but now he's saying 10%. What? 10% of your portfolio needs to be in gold, silver, precious metals, and crypto. If you told me that 5 years ago, I would have said, no way would a guy like Ray Dalio tell you that. No way would Jamie Dimon say that. No way would Goldman Sachs say, I'm totally all in with crypto. In fact, Jamie Dimon said, if anybody on my team is buying Bitcoin or crypto, I'm going to fire them. And within minutes, his own daughter calls him and says, hey, Dad, guess what? I own Bitcoin, right? That tells you that there was a disconnect. And what I want to do at Quasar is put that disconnect into a box and say, okay, here's where all the disconnects happen. Here's where it's all back together. And places like RoxomTV, when you show that out to the public, that's what they need to understand. This is not about a meme coin generation of, I can't wait to buy the next whatever coins comes out, right? This is about understanding what we're investing in. And I was asked over the weekend, I was just in Ireland, and I was asked over the weekend, well, what is Bitcoin? Why is it worth so much? Is nothing. And then I turn around and say, well, why is a stock worth something? Why is gold worth something? It's because somebody's willing to pay for it. And I always say that the rule of anything in your investing is one thing. It's the mispricing of pricing. And if big firms are buying crypto and Bitcoin, then maybe I should be too. Now, over the weekend, we heard this thing about, oh, there's some big dormant wallets out there that are opening up and starting to release some of that crypto. Okay, I don't care. I'm not going to speculate on who it is or why they're buying or why they're selling. I'm worried about me as an investor. I'm worried about the RoxomTV people that are out there going, I don't know what to do. I can't tell you what the Fed's going to do. If I did, my crystal ball would be working. I don't want to have to do that. What I want to do is give people the facts and say, let's peel away some of that onion away and not let a talking head tell me exactly what's happening out there. Because I believe that people are actually smarter than we give them credit for, right? If you ask me the question, this happened a lot of times. Why is the newspapers, why is the New York Times, why is the Wall Street Journal written on a 7th grade level? It's so that everybody can understand it. So that's not what I believe people are at today. I believe people are very intelligent. I think believe they understand it, but sometimes the noise gets a little too raucous out there. So if I'm hearing that this big investor that from the very get-go, it's Satoshi himself, it's the US government, no, it's this, I don't care. All I care about is price. And price dictates everything to me. And if the price is going up, there's a reason, because it's supply and demand. It's the old-fashioned, that comes back from the 1200s, right? If I've got something somebody wants and somebody has it, that price is decided, right? You can say, oh, well, Bitcoin's like tulips. Well, even tulips went up. Back then you couldn't short tulips. Today you can short it. So I want to make sure I'm on the right side of the equation of the market. But here's what we're seeing. We're seeing Bitcoin at 108.5, right? So what does that tell me? That tells me that the person that is with this huge, large wallet is not dumping as hard as he could or she could. We know that right now, we know that these wallets, I think there's 4 of them, aren't doing that. So I wanted to know that. And I didn't want to hear all the, oh my God, can you believe what's happening out in the market? Can you believe what's happening in the world? Oh my God, this person's doing that. I don't care what they're doing. All I care about is what price is. And the price is dictating that right now, crypto's okay right now.
Yeah, no, and we really appreciate it for everything you're doing at Quasar Markets, because like you said, we don't want to be looking back at anger at those missed opportunities. And you, me, and Sally, we can't wait for the most up-to-date info on all the investments that we're trying to make specifically with Bitcoin. So really appreciative of the things.
And let's keep that wonder wall up at 108, right?
Right, I'm hoping, man. We're hoping and praying. I'll be singing Champagne Supernova if we break all-time highs during this call, but we'll see. Hang 10, Stephen. We got an article I can't wait to get some of your feedback on, and we'll have you back in just a sec. Because Michael Saylor, well, he's back in the market, and Bitcoin Twitter is holding its collective breath. Why? Well, because strategy now is only 2,600 BTC away from owning 600,000 Bitcoin. That's right. Saylor's company is basically Thanos collecting Satoshis instead of Infinity Stones. They've recently bought another 5,000 Bitcoin for around $531 million. Which tied to their record for biggest purchase ever. And now, with Bitcoin trading at around 108,109, Saylor dropped a suspicious post on X with their portfolio tracker and a very casual caption, saying, "Some weeks you just need to hodl," which in Saylor speak either means we're buying more or we're buying more and laughing while we do it. Historically, these cryptic tweets precede official purchase announcements. So is this the bait or just another flex? I don't know, but either way, the market is definitely watching. Strategy already holds $64.57 billion in Bitcoin, with $14 billion of it in unrealized gains. Their average buy price, around $71,000. So they basically turned a software company into a glorified Bitcoin vending machine, and it's working. Since they started this strategy in 2020, Bitcoin's up 1,000%. Their stock up over 3,300%. Meanwhile, your cousin who told you to buy Solana at the top is still blaming the SEC. And here's where things get really fun. Strategy's moves influence others, as firms like Figma and corporate treasuries around the world are starting to copy the Saylor playbook. Even whispers of a strategy buy can move sentiment in the market. And if they do make the buy, this would be the 13th straight week of accumulation, which means Saylor isn't investing, he's collecting. And if the market sees another huge buy, don't be surprised if Bitcoin punches through that all-time high of 111,970 like it's a minor inconvenience. As Saylor says, own Bitcoin or serve the Silicon overlords. And you know what? He's not wrong. We're bringing back Steven. Steven, Saylor's turning corporate Bitcoin accumulation into a religion. From your view, how much of an impact do these massive buys have on broader institutional sentiment? What do you think?
Yeah, I mean, I think that people are watching what Michael does when he tweets, right? And I think we're catching that on algos and things like that. And I think people are trying to stay ahead of Michael Saylor. That'd be tough to do, right? Because Michael has been buying all the way up. He's not been just holding and just saying, hey, my next buy is once a month, right? You can do that through certain places like Coinbase and things like that. But he's not doing that. He's basing where he is saying strategically, this is where I'd like to own. I'd like to own more, and I want to continue to own more. And he's saying, I want to own more because I don't think that the mispricing of pricing, he's saying that the price of Bitcoin is going to be way higher than it is now. He's not scared. He wasn't scared at 91,000. He wasn't scared at 95,000. He wasn't scared at 100,000, and he wasn't scared at 105,000. And he's telling you again, he's still not scared at 108,000. So he's telling me that he thinks the price is either going to double or triple or quadruple because he's not buying for today. He's buying for multiples. He's not buying for 10% win here. He's buying it because he thinks the market's going to go way higher. Now, I've always said that the thing about strategy and MicroStrategy is one thing. He is looking to create his own bank. I think he's going to be a huge player in the future when we look at crypto. And he's saying he is a Bitcoin maximalist. So he is saying that I like it in the Bitcoin era, and I do think that there'll be rails, meaning that the lightning rails for Bitcoin or some way making microtransactions a lot easier. So I think in the future, he's saying, I not only just want to be an owner of this, including my own crypto, he's saying that he also wants to hold this to be something of a middle person for those microtransactions. Now, I want to see MicroStrategy itself actually start to create something outside of just let me go buy more Bitcoin and hold it on my cold wallets. I want to see him create something, do something outside of that. Then I'll be okay. Then he's really into it to being a bank. But right now, he just wants to be an owner of it, and he's okay with that. So you know what? He's no longer just a tech company.
Yeah, do you think that could maybe be the next pivot for Strategy? I mean, they were a software company initially, but it seems like that makes up a very, very small fraction of their current business model. Do you think there's an opportunity there for Saylor to shift Strategy's focus once again from just being a Bitcoin treasury to something else entirely?
Yeah, if you ask Elon Musk, he's had 25 different jobs, right? I mean, people of that nature, right? They don't just they always pivot, right? And that's how they do very well. I mean, if you ask Jeff Bezos, his greatest idea was putting books on the internet. He pivoted how many times to be Amazon, right? And I expect the same thing out of Michael Saylor. I don't expect him to just be one of those guys who just says, "I'm just going to keep buying. I'm going to be a bank." I expect him to be something more than that, and possibly having more than one company. He could be an exchange himself. He could be a broker himself. He could be a bank himself, digital banking. He could be in every country. I really think that he's got something here, and I think he's basing it all around the fourth dimension here on this, the fourth industrial revolution, saying, hey, look, I don't think it's in fiat. And if it's not in fiat, how are you going to trade? How are you going to buy oil? How are you going to buy groceries? You're going to buy it in Bitcoin, and I want to be that person. So there's going to be a whole ecosystem around that for him. And the difference with him and most companies is he has the money and the crypto to be able to do that now. He won't have to even go to a Jamie Dimon or a Goldman Sachs and say, hey, look, I need help. Can you help me out? Can you invest in me? No? Okay, I don't need you anymore. So I think that's what he's done. He's already done the investment side, and he's already made money on the investment side on his company. So, and the people that are investing with him believe in him and continue to give him more money. So I think he's got a whole bunch of fiat ready to go to even buy even more. So I'm not too worried about it. But if you look at him, he's being a leader. He's not just saying, I'm going to do this. But now you're seeing him as other institutions are going, what is Michael Saylor doing? I'm going to do too. Like I said earlier, I think Mooch is also saying the same thing. Hey, it's one of my biggest positions, right? Whereas 10 years ago, it wasn't one of his biggest positions. You look at these firms that go, hey, you know what? I think that maybe he's right, and I'm not going to be left behind. And so, 600,000 Bitcoin. I mean, we all know 21 million, right? So that's a sizable position. This is not I'm going to be a 1%er here. He wants to be a 10%er at some point, I think.
Yeah. No, I mean, a guy who's that smart and literally has like his own Scrooge McDuck digital vault of Bitcoins, like you think he's probably got something planned on the horizon. And he mentioned he's close to 600,000 Bitcoin right now in their treasury. Do you think that number solidifies them as kind of the de facto benchmark for Bitcoin treasury strategy, or does it risk concentrating too much market influence in one player?
Yeah, that's a very good question. Yes, it is too much of a concentration. I don't like that. That's the whole point of crypto, right? Is that we all have a stake in this. The problem is now that the people that are coming into Bitcoin now are saying, well, those of you who got in earlier are just lucky. We weren't lucky. We invested based on what we thought was going to happen, right? Saylor wasn't lucky. He kept it. If he's lucky, he's very, very lucky, and he got lucky several thousand times, right? That's not true. It can't happen, right? Yes, I don't like concentration for that very reason, right? But as that concentration happens, the scarcity of this Bitcoin is going way down, and the supply of it is just minimizing. And right now we're finding that miners can't mine it fast enough as it's on the exchange. Now, when you see these other firms that are opening up these wallets that are saying, okay, I've been around since the beginning, I'm going to dump some of mine, that's helping the decentralization of it a little bit, right? But not by dumping on us, which is good, by releasing more onto the exchanges. We did see a huge influx last month, inflow into the ETFs. Why are we seeing the influx into the ETFs? Well, that's pretty simple, because people that are scared of buying it outright, don't want to miss the potential of the upside, but they also don't want to be holding Bitcoin and not being able to sell it, so they can get in and out of their ETF very quickly. But that also says, I don't want to own the ETF. I want to own the physical. I want to own the gold. I want to own the silver. And if you do that, you got to own the actual Bitcoin. You got to understand it. So the truth is, we still have some education happening. And I think Roxom does a great job of educating. We got to educate people of how to buy it. It's opening up an account. What's 2FA? How do I protect my account? I'm seeing too much hacking going on. I'm scared. Well, if you're scared, there's a problem, right? People are scared about owning gold in their own home, right? So what do? They put it in the bank, or they own the ETF. So it's the same situation. You have now elevated crypto to an actual asset class that's equal to these other things. And I'm telling you right now, in about 5 or 10 years, we're going to pass up precious metals. They're probably going to pass up most of the fiat on the planet. We're not going to pass the dollar just right away. But my goodness, if you look at it from the perspective of what Saylor and Scaramucci and Jamie Dimon, these guys are going to own all of it. There may not be enough for the average person. And then I can see why Tom Lee says Bitcoin's at $1 million. Bitcoin's going to go higher than $1 million. Why? Because scarcity, demand.
One thing I would love to get your thoughts on, we're seeing all of this corporate influx into the Bitcoin space, corporate treasury specifically recently, ETFs. But there has been a notion recently that retail has kind of backed out a little bit. And I wonder how much of this corporate influence is affecting retail being participating in Bitcoin, specifically like on a psychological level. Because with Bitcoin in the 6 digits now, if I'm not already in this and I'm just average Joe Schmo, even though I can buy it fractionally, that seems like, oh, I've already missed the boat. Now, big corporations know that's not the case. Do you think that these big corporate treasury buys could maybe unintentionally be having a negative effect on retail because people who aren't in it yet are just like, well, I've already missed the boat, it's too expensive? And now this is just becoming more of a corporate game? Or what are your thoughts on that?
I was told that Bitcoin was too expensive at 10,000. I was told that Bitcoin was too expensive at 5,000 and 20,000. You name the number, it's always too expensive, right? I still don't think it's too expensive. What corporate is looking at, these corporations, I think even Amazon's getting to play in the game too as well. They're not missing the boat, because what they're saying is, okay, for those of you or the institutions or whoever that want to buy something, guess what? I'll make it available to you. So Visa and MasterCard already allows you to buy Bitcoin, or think of it like Stripe or PayPal. You can buy it, right? You can buy it right there, and then you can spend it, right? So that's been the key. And these retail organizations that are selling things, the corporations that are retailers, they want a part of that game. So instead of them taking their bank and saying, I'm going to take my US dollars or my euros or pounds and I'm going to physically go to an exchange and pay exorbitant rates, and say, okay, instead, I'll just get it from the person that wants to buy the product, and I'll just take it from them and exchange it that way because it's free, because I already am in the bank. So yeah, I think there's a good chance, even if retail, the mom and pop people that owning Bitcoin are scared and dumping, I don't have a problem with that. I always say, look, if you make a profit, go ahead, take your profit. But are you going to be that person like Michael Saylor who still owns it at $250,000? Are you going to be Michael Saylor who owns it at $1 million, or Tom Lee who still owns it at $2 to $3 million, right? Yeah, I think we're going to go that high. I think there's no stopping it. And on top of all of these commercial and real estate companies that are also doing it, you've also got governments buying Bitcoin and crypto. You've got states that are saying, okay, you know what? You can pay you can pay for your state income, state taxes with Bitcoin. That's a change from 5 years ago, right? You're seeing countries that were saying, absolutely no way am I going to take crypto, going, yep, you know what? I got to be a part of this new economy or I want to be left behind. And they don't want to be that. So it doesn't matter if it's institutions or retail or countries or states, they're all accumulating in one way or a factor or another. Now, whether they buy it at a certain price, that's up to them, but we're going to go higher because we all know one thing. It's all about dictated by supply, and the supply isn't growing. So if the demand is there, no matter if the demand is high or the demand is very low, it's still demand on a very low supply. So if I were to tell you that there's no more gold in the world, you cannot mine any more gold, that's it, we're done. How many gold miners would go crazy right now, right? They already know that. That's what miners know. So the miners are still producing at as fast as rates they ever can. And I've heard the stories now about quantum computing is going to break. No, it's not. Stop the nonsense. Right. What I'm saying is that, look, it doesn't matter if you buy it at 5,000, 10,000, 95,000, 100,000, or 200,000, the price is only going to go in one direction, up, because there is only a finite supply of 21 million. So that's what Saylor is saying. Look, I know and I understand that at 105 it's pretty high. I know at 108 it's pretty high, but I think it's the mispricing of pricing. We're going to go higher. He's not buying it because he thinks it's going to make him look good. He's buying because he wants to make money. It's the only reason to be in business, right? So when you look at these big firms, these institutions, they're saying, I don't just want to be an owner of it. I don't want to just be a treasury of crypto. I want to be a player. I want to be part of the Visa, MasterCard, PayPal, Stripe world. How do I get that crypto from people's hands? The only way you do it is if you give it to them. Don't sell them your crypto. Hold it. That's what's making people rich. They're not being rich by buying and selling every single day, 50xing and 100xing their crypto. They're not doing it that way. Some of them are making some wins, but mostly they're losing. It's because they're holding it and accumulating. Be a Michael Saylor. That's what I'm saying.
Yeah, I think we can all agree on that. It does raise an interesting question, though. I know there's the Jack Dorseys of the world, for instance, have come out and said, listen, I think Bitcoin needs to be treated as a currency going forward that people are actively using to buy and sell, goods and services. Do you think that's necessary or for Bitcoin to fully reach its potential, that we're going to need to see Bitcoin utilized that way and not just a store of value or digital gold?
Yes, absolutely, 100%. Because why? Three things. The first reason is a store of value is still a store of value. If you have dollars in your bank, that's still a store of value. You're still storing dollars. For what reason? So that down the road you can spend them, right? Or that you can borrow against it to buy a house. That's why you have dollars. That's why you have assets or investments. It doesn't matter what your asset is. You're still storing it, and it's still I guess a lot of people call it digital gold. I don't really like that. A store of value to me means that you're storing it for a reason that's a higher price down the road so that you can spend it or sell it and make more money on something else, right? So when you look at the store of value, no, we need to be able to spend it. You heard Scott Bessent, the Secretary of the Treasury of the United States, say this morning, he made 3/4 of his money trading currency. That's where he made his money. He's the Secretary of the Treasury, right? This guy is trading currency. That's how he did it, right? He's saying the same thing. Look, in order for Bitcoin to be even bigger, to be widely accepted and understand it by the people, the masses that don't really understand it. Oh, wait, I can now spend my Bitcoin? Okay, great. Most people don't even know they can spend Bitcoin. I had that question, well, what can I spend it on? Well, I can't buy a hammer with Bitcoin. Yeah, actually you can, but they don't know that. So education's a big part of that, and I understand that, and that's happening now. But when you go fast forward a little bit, 5-10 years from now, Jack Dorsey is saying, I don't just want to own it. I don't want to be just Michael Saylor. I want to be the conduit. I want to be the middleman saying, look, you want to be able to trade it back and forth? Great. You want to be able to go to Amazon and buy it? Great. I'll be the Stripe or the PayPal, as I said earlier. I want to do that. He's saying it on an even bigger level. He's saying Circle and these other companies that he's working with, saying, okay, I don't care if it's the yen or the euro, the pound, or the Australian dollar, the loonie. I don't care. I want to be able to be the conduit to all of these exchanges. And so that I've always said the problem with the world in general is that people in Japan know how to buy things in the United States, stock or whatever. But the people in the United States don't really know on general how to buy things in Japan. That conduit now with crypto makes it so much easier. I can either buy it in yen, I can buy it in dollar, I can now buy it in Bitcoin. And that's what Jack's saying. Jack's saying, hey, you know what? I'm going to make the world a lot smaller, closer together. I'll make it easier to buy. Tariffs or no tariffs, if I want to own that those pair of chopsticks in Japan, or I want to own that car out of the UK, and I want to buy that Peugeot or that Ferrari, heck yeah, now we can do it a lot easier. Now I can do it the way that I want to do it. And that's giving freedom to people by owning Bitcoin. That's what Jack's saying. It's not just saying, hey, look, I want to be the big bank of the world, like Michael Saylor, and I think Saylor also will turn into a bank as well. I'm not just saying that Jack Dorsey wants to be a bank and an owner of it, but also I want to be a conduit. I think you're going to see ecosystems built around this, and we're already seeing that now. And I think that's what's going to happen. The psychology of people are going to be like, okay, wait a minute. If these people are doing it, if Elon Musk is in it, and he's taking Bitcoin for Tesla, then maybe I should start getting it. Well, wait a minute. I can buy my groceries now with it. Now it filters down to the retail. Retail isn't seeing that right now. That's why you're saying, oh, wait a minute. I bought Bitcoin at 5,000. Maybe I should take my profit. I don't have a problem with that. Don't take it all off, but don't have a problem with that, right? And spend it the way you want to spend it. But if you're looking for down the road, if you're looking for the future, and that's what Jack's saying, that's what Mooch is saying, that's what Saylor is saying, and that's what RoxomTV and Quasar Markets is saying, is that the future is going to be built around this fourth institution. And I agree with this, that there's two things going on right now that I think most people don't really realize is happening. Behind the scenes, institutions are buying faster than people realize. And the second thing is how they're building it and what they're doing with it. We're only seeing and scratching the surface of what Saylor and Jack Dorsey are doing. They're probably even building even bigger things. I mean, if you look in your Oculus right now, you can probably buy your games on it. Look at microtransactions. We haven't seen the microtransactions in crypto. What do you see your Xbox, your PlayStation, Sony, and Microsoft starting taking microtransactions in crypto on the Bitcoin rails? Then you're really going to see the market take off.
Yeah, no, I think you're right. And it's an absolute copycat league, just like in sports leagues. Somebody does something that's working, and then all of a sudden everybody's doing a push-tush, right? Or tush-push, I should say. So with that being said, though, we're seeing that right now with corporate treasury markets. I mean, every day it seems like there's a new one popping up. Figma recently, now there's a lot of foreign companies that are adopting similar treasury models to strategy. Do you think Saylor's strategy model is exportable, or is it uniquely tied to Strategy's DNA and it might not work for just any other company out there?
As you said earlier, Hank, he was a technology company who pivoted, right? These companies have to pivot, and you're seeing that now. Look, back in the early 90s, your company was failing on this New York Stock Exchange if you didn't put .com behind your name, right? The minute that .com came around, boom, your stock went through the roof because all of a sudden you've now joined the new revolution. At the very beginning of, and I can tell you that I remember how it all happened. When the internet came around, people didn't believe in it. It was the devil's playground or the workshop or whatever you wanted to know. Nothing's out. We heard everything, right? We're hearing the same excuses, the same problems. Oh, you're just lucky because you got involved in the internet. Oh, you're just lucky because you got involved in crypto early. Look, it's not about that. It's about, and I always tell people the same thing. The world is about one thing. What separates the Saylors and the Mooches and the big, well, I would say Elon Musk, is vision. Do these companies have vision? And Figma is saying, you know what, I don't want to miss this vision. If the vision is the next world, is this we're all wrapped around crypto, I don't want to miss that vision. I think the vision in general is being misconstrued a wee bit, saying that, okay, everybody in the world is going to have Bitcoin and everybody's going to be trading Bitcoin and there'll be no dollars in the world, there'll be no euros anymore, no, that's not going to happen, right? We're going to still have fiat and countries are still going to be countries and things are going to happen. There's not going to be a one world just yet. It may not be in our lifetime. It may happen, but not in our lifetime. I'm saying that these guys are saying, I see a vision where people are using crypto in their daily lives. That's what's happening is different, right? Saylor's going, I want to be a part of that, right? Nobody else, and I want to be the biggest player, which right now he is, at least from the commercial side. But when you look at you just said it yourself, leader, not a follower. Jamie Dimon isn't going to be a follower. He's going to be a leader. So the only way to do that is to pass him up by buying more Bitcoin. And there's only a finite amount. That's what I'm saying. At some point, thirey're going to be like, okay, as you said, Hank, you're right. Corporations are going to be like, uh-oh, wait a minute. I'm not in Bitcoin. I better get in Bitcoin. Why? I use Figma for our software, right? When I get ideas and put them together and build ideas on the Figma. Well, now I can pay for it in Bitcoin because they have a treasury. That just changed the whole dynamics for me. So when I look at these companies and going, okay, we're no longer going to be in crypto. We're also going to be in the blockchain. We're also going to take our product and be in the blockchain, and we got to be able to monetize that blockchain. And these cryptos are going to be right there doing that. So I think the question mark around these visionaries has to be, what is their vision? And Saylor laid out his vision. I want to own all the Bitcoin that I can possibly own. Tom Lee said, here's my vision. I see it's going to 250,000, and here's the 5 reasons. He said, and the main reason was there's only 21 million of them and adoption of it, right? And then you saw Jamie Dimon going, I don't want to miss the boat. So there's his vision, right? Whose vision is better? Well, the vision that's going to be better is the one who actually predicts correctly in the future. Now, what does that future look like? Well, the people that have the most Bitcoin are the ones that's going to create the vision because they have the Bitcoin in order to create the vision. So I want to keep my eye on Michael Saylor. I want to keep my eye on Jamie Dimon because they're the ones going to create the vision because they have the Bitcoin to create the vision. And that sometimes is very hard for people to understand. How is Elon Musk so popular and so big? Because he had the money to do it. He had the money to be able to build the Tesla. He didn't start the first Tesla. He's a marketing guy. That's what he does, right? But he had the vision and he understood what that you had, so he created it. Now it's not a car company anymore. Now it's a technology company that makes other things, right? And including self-driving vehicles and, my goodness, robo-taxis. That's not how we started out with Tesla, but that was his vision. And so we saw that vision grow, but a lot of people can't visualize that vision 9 times out of 10. Put that in perspective, Jeff Bezos couldn't even visualize his own vision. He didn't even know what Amazon was going to be. Look at Amazon today. He did not think he was going to be half the things he's doing today, but his vision grew. And so we got to make sure not only that we see their vision and understand their vision, but can they pivot with their vision, as you said earlier. And yes, these are the people that are pivoting. So I want to be able to see that. And I want to see, the last thing I want to see, the fifth thing is R&D. I want to see research and development in these things. Are they building the future? Are they building the rails that we need? If quantum computing can break some of these 2FA situations, and we know that all the leaks happened around all of our seed words, they can't put them all together, so that's not going to happen. But how do we get past that? So what's the vision behind that? That's what I want to get behind.
Yeah. No, I mean, kind of your point. What's that saying? The history is written by the winners, right, or whatever. So it's like the people who are the first movers in the Bitcoin space are ultimately the ones that are shaping this new financial future we're entering into. So I agree a lot with that. And let's be real.
But when you ask
once
that question,
Grand Theft Auto 6 comes out next year, Rockstar, call us. Let's get us a Roxomtv station on there. It's going to be going absolutely parabolic when the rest of the world doesn't do anything for the next year. So,
but when you say that, you have to look at it this perspective. At the turn of the century. If I were to tell you about automobiles, the turn of the century, how many automobile manufacturers there were? There were over 200 manufacturers of the automobile. Why? Because they were trying to make the best automobile. It wasn't until Henry Ford said, okay, I've got a better idea of how to make the car, make it faster, make it better. Now, regardless of what you think about Henry Ford, he created the assembly line. He had a vision that said, I want to take the idea of the automobile and take it to the next level. So it's not just the vision of, I want to own Bitcoin, but how do we take it to the next level? Who are the people that are creating the next level of the vision to make it? And so when he made it very cheap, he said, I want to make the car so cheap that everybody can afford a car. When he did that, Ford, Oldsmobile, and a few others, General Motors, became one of the few car makers in the world. The rest of them fell apart. So I'm not looking for people that are first in line at the trough of Bitcoin. I'm looking at the people that are trying to create R&D of the next level of it. And we got some really cool people that are working on some really cool projects, blockchain projects that I'm looking forward to in the future. But not every blockchain is going to make it. Not every crypto idea is going to make it. And 90% of the meme coins are going to go away like the automobiles did at the turn of the century. So the next level of all of this is I want to look at the companies that are creating the future. And look, you've got to look at Jack Dorsey because he's created most of our future as we look at Twitter. I mean, he changed the way that we communicate with each other, right? Elon Musk changes how we got around with each other. The guy's got a vision to go to Mars. Right, and he hasn't stopped that. Occupy Mars is his saying. So I want to see the vision of these people that are creating the next level of blockchain and crypto. Tell me what your vision is, and will your vision surpass you? And I hope it does.
Well put, Stephen. Well put. Hang tight. We got another story that I need your 2 cents on in just a sec, because it turns out the U.S. Secret Service isn't just good at dodging bullets and babysitting presidents. They're also quietly stacking sats by confiscating them from criminals. According to a new Bloomberg report, the Secret Service's Global Investigative Operations Center, or GIOC, because of course it needs a cool acronym, has now recovered close to $400 million in stolen or illicit crypto. This includes a whopping $225 million seized last month alone. Now, all of this crypto reportedly lives in a single cold storage wallet, which is either the most secure wallet on Earth or a future Netflix doc just waiting to happen. Going cold, I like it. Now, it's serious when a federal agency best known for tackling counterfeiters is now chasing down crypto scams in over 60 countries. They're even offering free week-long trainings to help international law enforcement detect crypto crime. Because apparently some cops are out here like, wait, Bitcoin isn't a Call of Duty skin? Kali Smith, the attorney leading the Secret Service's crypto strategy, says local authorities are often shocked to find out crypto crime is even happening in their jurisdictions, which is both terrifying and totally believable. Meanwhile, companies like Coinbase and Tether are actively working with the Secret Service, even helping them track and freeze suspicious funds. because nothing says we're totally legit, like calling up and the Fed saying, hey, we found something shady. You want it? So while this might sound like a takedown of crypto, it's actually the opposite. It proves the system can in fact be policed. It proves on-chain transactions are traceable. And it proves that crypto isn't lawless, it's transparent. You can run, but you can't hide from the blockchain, friends. So next time someone tells you Bitcoin is only used by criminals, remind them that the Secret Service is using it to catch those criminals. And unlike fiat, you can't forge it. We're bringing back Steven. Steven, the Secret Service is running cold wallets and chasing crypto crimes across 60 countries. What does that tell you about where regulation and enforcement are headed?
Yeah, that's a good question. You know, look, when I was at the White House, no better friend to us than the Secret Service. Why? Because I felt comfortable and protected when I was working there, right? They have twofold situation there. Most people don't know this, but the Secret Service themselves actually work for the Department of the Treasury. Their job is to protect us for these kind of criminals. In a lot of ways, I hear that question at least 9 times a day saying, Steve, I don't really understand Bitcoin, and Bitcoin scares me because somebody can hack into my account, steal my crypto. Well, look, there are agencies out there that are actually out there to protect us, and we already have those companies and those organizations within the government, FINRA, they're already back on board, and we have a president now that is very crypto friendly, who is now saying, all right, I'm literally directing you as an agency to go after the bad guys and hit them. Now, we know that the biggest bad actor out in the world that's doing the crypto transactions is North Korea. So let's go hit them. Let's go get that back. And they're actually able to see that. When I hear, oh, well, crypto's untraceable, it's only used by criminals, as you just said, Hank, let's get supersonic and talk about this, right? The truth of the matter is that everything is on the blockchain. That's the whole point. So we can trace where that money went. And I don't care if you tornado the money out or tornado the crypto out or tornado it out somewhere else. We're going to trace it and we're going to catch you. Rarely does a bad guy ever get away, right? So I think that is important that in the media, that narrative also gets out to the mass media, because there is this idea that, hey, you know what? There's a criminal element in it and I don't want to be a part of a criminal element, or there's only criminals in it. Criminals are in everything. Dollars, euros. You don't think they're trading in euros and dollars? They're doing it every day, right? You can't trace crypto. It's completely traceable. That's what the blockchain's all about, and that's why we're able to see where the money went. So that's why they were able to pull it back. Yes, there's no overlord in crypto right now. But when you look at it from the perspective of setting precedents, Secret Service right now is setting precedents and saying, look, if we can do it, France, you can do it. Hey, Japan, you can do it. China, you can do it. All these other countries can do it. And all of a sudden, the bad guys are going to be less interred to be able to use it for criminal enterprises than anything else, because it is traceable.
Do you think this kind of enforcement by the Secret Service, does it actually help legitimize Bitcoin in the eyes of institutional investors, or do you think the headlines are still scaring some people off?
Yeah, the institutions love it. They love that insight and overlord version of it. They want some kind of protection, some guardrails. They always like that. Ask the SEC or FINRA, which I'm a big proponent of, because I don't like criminals, right? I think that element is stopping the expansion of crypto as we know it, right? These firms, corporations like Amazon or retailers of the bigger nature, are going to be a little bit more scared because there isn't this enforcement on it. Now, the question mark about it is not just about pulling back the $400 million in Bitcoin. The question mark around it is, will the court systems be a part of this? Will judges be a part of this? Will advocates for crypto reform be a part of this? Will we write better laws? Hey, Congress, get it together, right? That's when you'll start to see the next level of this happen and more adoption of it. So there's, like I said earlier, it's an ecosystem that has to happen around Bitcoin, which is happening, but I think it would happen faster if the Secret Service goes, not only did we catch the bad guy, but we gave it to the judges and the court systems, and they just punished them. They're going to jail for a very, very long time. That's going to give pause to other criminals. Right now, if a country like North Korea says, well, we're unpunishable because we're in a country that you can't touch, that's a problem, right? But they have a very minute amount that they've stolen, and we're getting a lot of that back anyway, and they're spending it, so we're getting it back one way or another. So no, I don't think so, and I think people that are nervous or scared, you want to be scared about something? be scared about how the U.S. government is spending our money. Go see how M2, the money supply, they're printing money faster than ever before in history. Look at COVID. That was just money being thrown at the markets and people in general. That's fine. I'm glad we all have that because it saved a lot of people's lives. But the M2 needs to slow down. We are devaluating the dollar, and in 5 decades hasn't been done this much. That's another reason why crypto is also being pushed up. You want to get scared about something? That's something to be scared about.
Yeah, absolutely. And I agree with you. I think any kind of government intervention, for the most part, usually big corporations are going to see as a additional reason to believe in Bitcoin. You know, it's more credible if there are actual guardrails in place and it's no longer this Wild West that we feel like we've kind of experienced the last 15 or so years. So I'm totally on board with that. On the other side of the coin, though, there is some government intervention that people are not so excited about. And I'm going to talk about that right now and bring it back because Max Keiser is back on his cyber soapbox. And this time he's predicting that when Bitcoin hits 400 grand, not if, but when, the US government is going to freak out and invoke national security protocols. Like it's the Cuban Missile Crisis, but the missiles are ledger entries and the bombs are hash rates. Now, in a recent tweet, Max suggested that the US might even seize publicly traded companies like MicroStrategy, Coinbase, Marathon Digital, and Riot Platforms. But why? Well, because at that price point, the global hash wars, basically a geopolitical pissing contest over who can mine Bitcoin better, will get intense enough to trigger panic in Washington. Apparently, once enough computational power gets involved, it's no longer a financial system, it's a threat to national order. Now, that sounds insane until you remember that the US has a history of declaring war on things like drugs, poverty, and fun. The implication here is that Bitcoin's price doesn't just reflect value, it reflects power. And when the price hits 400 grand, that power gets too loud for the feds to ignore. Keiser's forecast also implies that the government will stop pretending they don't understand Bitcoin and instead start pretending they always did. The threat, of course, isn't that Bitcoin is bad, it's that Bitcoin isn't theirs. Hash wars aren't just about who mines the blocks, it's about who controls the rails of global value. Now, Keiser's warning that these companies could be seized should be enough to make anyone holding corporate BTC rethink their storage plan. Self-custody, anyone? Bueller? Now, if this happens, it's bullish, ironically, because nothing says this thing is real like the government kicking down the door to confiscate it. We're bringing it back. Steven, do you think Keiser's prediction about national security panic at $400,000 BTC is alarmist? Or are there real systemic threats posed by Bitcoin dominance?
In October 2020, Max Keiser said that if Biden wins the election and beats Trump, which he did, that Bitcoin will rise faster than a President Trump. He was wrong, right? Because now Trump is a Bitcoin, he loves crypto, he loves all that. Biden hurt the Bitcoin world and community. So he was wrong about that. He also said that he thinks that Bitcoin will do better if it's gold backed. Do we really want gold backed Bitcoin? No, I don't want a stable coin backed on Bitcoin. He thinks it'll rise there. Look, I like Max because Max is a Bitcoin maximalist. I don't like him because of that fact, but he is a Bitcoin maximalist. And he's also saying, look, there's going to be a level of which people will all take interest at Bitcoin, and he's defining that number at 400,000. Now, to me, I don't think you should define anything by a price. Let the price dictate itself by what the people are willing to pay for it. But he's saying at that price that a lot of these companies that do quantum computing will really ramp up their prices, the machines to break the Bitcoin chains and try to steal some of that crypto. I think by the time that happens, we'll be way past that. I think Max's vision is a little light on this side of it. I do understand what he's saying, but I don't think it's going to happen. And when I look at Bitcoin and quantum computing, you can't talk about it and not having the same sentence a lot of times, because people are scared about quantum computing, because they're scared about AI. They're scared. People are scared of their own shadow at this point, right? And they need to stop being scared. They need to start understanding that as we look forward into the future, we need to think about how we will integrate it into our lives. And Max is saying at $400,000, which is roughly what in euros, 312,000 euros. It's an arbitrary number to me, right? Why people say it's in dollars is one Bitcoin is still worth one Bitcoin, right? So tell me when it's worth it to break that Bitcoin up, right? And a lot of people don't understand that Bitcoin can be broken up into bits, right? They, oh, I got to buy a whole Bitcoin. That's why I think it's expensive. So why set an arbitrary number of 400,000? The quantum machine, the computing is not thinking about, oh, when it hits 400,000, I'm going to start breaking it down. They're not thinking about that, right? Quantum computing is worried about other things in the world. They're working on bigger projects like healthcare, finding drugs to make us better, right? They're not worried about, can I break the Bitcoin at 21 million of it? So I understand where he's coming from, but I don't agree with his philosophy about it. He does say, I mean, if you go back all the way to September of 2020, he does say that there will be a saturation point on Earth of Bitcoin. Okay, that was 5 years ago, almost 5 years ago, and we're not at saturation point yet. We won't be at saturation point, I think, for another 3 to 5 years. Maybe 2030 seems to be an arbitrary date for a lot of these Bitcoin maximalists. I don't want to do that. My crystal ball is broken today, Hank. It's not working for it. Why do I want to do that to myself or anybody else? Where I'm putting you as a Roxom or myself or Max at a point of going, this is definitive. This is what's really going to happen. If you told me that Bitcoin was at 110,000 US dollars to one Bitcoin by 2025, I would have been like, I don't know. It's a little pricey there. But it wasn't, right? We don't know the future. We can't see it. But again, I go harken back to what I talked about was that vision. The vision is being created by those people with vision. Now, the difference is Max Keiser doesn't own a whole ton of Bitcoin like an Elon Musk, like a Saylor, like a Mooch. Those are the ones who are going to set the prime understanding of saturation. So if they're not saying saturation is happening, I'm not going to say saturation is happening. Max is saying it, but I'm not saying that.
Yeah, no, I agree with you. I think the only thing that we've proven time and again that we can expect from Bitcoin going forward is that orange coin go up. Everything beside that is speculation at this point. And like you said, 400 grand is a really arbitrary number. So we love you, Max, but not sure if I 100% buy this one. Steven, I tell you, I could chat with you all day, my friend. We didn't get to everything we wanted to talk about today, which just means we're going to have you back another time because you are just such a treat and a wealth of information that we just love hearing you chat. And we certainly appreciate having you on the show today and every time, and hopefully again very soon, my friend, because you're so fun.
Bitcoin to the moon, Hank.
Bitcoin to the moon, baby. Well, enjoy your Monday, Steven. As always, it's an absolute pleasure. And really quick before I let you go, where can people find out more about you and Quasar Markets if they're interested?
QuasarMarkets.com. We'll see you there.
Rock and roll. We'll see you next time, Steven. Thank you so much for your time. And that's a wrap for today's episode of the Blockchain Report, boys and girls. As always, thanks for tuning in to get the most up-to-date Bitcoin bedlam and crypto chaos. We're here every single weekday morning at 8 a.m. PST, so make sure to join us. Until tomorrow, stay safe, stay solvent, and stay sovereign. I'll see you next time. Huddle on.
If you want to have me on, I'm happy to go weekly or bi-weekly or whatever you want to do. That's fine.